Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now tomorrow, April 22nd, is Earth Day, which celebrates awareness of the health of our environment. The idea started in the US in 1969 when a US senator called on Americans to take a stand on the environment after witnessing the effects of an oil spill in California. Now in the US, this led to the creation of various agencies like the Environment Protection Agency, but the movement went global in 1990, which in turn paved the way for the 92 UN Earth Summit in Brazil. Now, while you think about how you want to contribute on Earth Day, investors, of course, will be focused on a couple of other key topics. First, bond yields took a pause across major global bond markets, but only after US inflation-adjusted yields briefly turned positive and after the US 10-year yield almost approached 3%. Now, this had implications in a few areas, but particularly on the Japanese yen, because in parallel, the Bank of Japan reiterated its offer to buy an unlimited amount of 10-year bonds at a 0.25% yield. Now, this, of course, has pressured the yen in recent weeks, but the pause in bond yields has helped the yen also take a breather. Much of this may be positioning-led, of course, so we would continue to be cautious about taking any positions on yen in a significant way, given the threat of intervention amid extremely one-sided positioning. The pause in yields also had implications for European bond yields. The 10-year German bond yield briefly touched 0.96%, the highest level since 2015, as German producer prices rose by an eye-watering 30.9% in March. Now, much of this was due to energy prices, of course, which rose 84% as the effects of the Ukraine war started feeding into the data. In our view, though, the key remains whether the EU considers a broader ban on Russian energy or not, because this remains the key decision to watch in the coming days, in addition, of course, to the French presidential election. Now, over in China, the central bank surprised markets by leaving a key benchmark interest rate unchanged versus widespread expectations of a rate cut. Now, there are several possible reasons why policymakers chose this route, but two common ones out there are, first, that they don't want a repeat of previous episodes of unbridled credit growth that eventually created debt problems in sectors like real estate, or second, they don't want to cut rates at a time when most other major central banks are raising rates, particularly when the spread between US and Chinese government bond yields has largely closed. Now, while this disappointed equity markets, it did offer a bit of support to the renminbi. And look, given China's growth challenges, we do expect policy support to continue via other channels, but it does strengthen the case that a sector focus could also help navigate the near-term environment. For example, energy, which should benefit from high and rising energy prices globally, and industrials, which, where the policy priorities are two examples of equity sectors that we like that should also benefit in the current environment. Finally, looking ahead over the next few days, we'd remind investors that the ongoing earnings season remains key to near-term equity market expectations. We've seen a lot of individual company news so far, but a more comprehensive aggregated picture should start to emerge by next week. Also ongoing are the spring IMF World Bank meetings, with the G20 finance ministers meetings being held alongside. Now, current tensions have been focused on the participation of Russia, but as we go through the weekend, we'd also watch for any policy statements regarding global growth and inflation, and on any market pressures such as what we're witnessing on the Japanese yen. This is where the market implications could sit. So, a lot to watch over the coming days, but we'll pause there. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening. Wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.